Well, time to move on and get another corporate on our show, and it's an exclusive conversation we're going to be having with the management of JSW Energy. The company reported a mixed set of earnings for Q4. While the revenues came in line, the margins were a little bit disappointing. Mr. Prashant Jain, the Joint MD and Chief Executive Officer, JSW Energy, joins us on the show. Hi, Mr. Jain. Good morning. Thanks so much for joining in. Well, the numbers are a little bit disappointing, but I think what the street is excited about is about your Vision 2.0. You have increased even the profit estimates out there. I think it was around 4,200 earlier. Now you're talking about 5,600 to around 6,000 crores odd. But let's talk about the near term. How is Q1 shaping up? Could you give us a sense in terms of prices? Demand is high. We're feeling the heat out here. And 15 to 16% of your power is not linked, which is good news. You can sell it in the open market. So on demand as well as on pricing.
Good morning, Nigel. So first, I will take a little bit on the quarter gone by also, because, it's not the right perspective that the quarter gone by was a disappointing quarter, because in the previous year, there was a one-off item from the regulatory, true up, because of which the other income came. If you see adjusted normal operating income basis, our EBITDA was up by 8%. And that's where, you have to see the performance gone by. And going forward in the current quarter, the 2-3 interesting things were happening. In the month of April and May, the demand was subdued because of the sporadic rains all over the country, and because of which the demand was negative, but now it is picking up. But international thermal coal prices have been falling dramatically. And if you see the average coal price in the Q4 was $138, and which has fallen now to $102. And a lower CV coal basis, it is already in double digits. So the fuel prices will be very, very attractive in the current quarter and going forward. That's very interesting trend. And secondly, the merchant prices are also hardening up. So you are right that with our open capacity, it is going to help us tremendously.
You want to give us an insight on the coal prices? You said from 138 on an average for the last quarter, it's come to early hundreds, right? 102.
102, but on a lower CV coal, for example, 4,800 NARC basis, it will be close to, you can say that $92, $93.
Got it. And what about merchant tariffs? I remember it had gone to 10, 12 bucks, then it had come down a little bit. Give us an updated number on a blended basis, because obviously there'll be a difference between morning and evening rate.
So on a daily average is around north of 5 rupees, and last year average was 5 rupee 96 paisa. So it is a quite good, attractive tariff now, and all our units are running on whichever is the merchant capacity are running, and we are taking advantage of that.
Okay. Morning, Mr. Jain. Would you have a specific number in terms of a guidance you could put out for short-term power sales in FY24?
So last year we did close to 1,900 million units of the merchant sales, and this year we are going to do better than that. And I'm expecting that our margins are also going to improve. Last year we did around 3,800 crore of EBITDA, which was the second highest EBITDA in the lifespan of the company. And previous high was in 2015 at a point when the merchant prices were ruling very high. And now we have a contracted business. This year, I am expecting there will be at least 60 to 70% EBITDA growth as compared to the previous year. And in FY25, I think we will be touching in a 4-figure EBITDA.
Can you talk a bit about the Mitra acquisition? What is the targeted EBITDA improvement for Mitra? And even on the cost side, what will be the debt to EBITDA for the asset, and the outlook on debt and any debt reduction plans for FY24?
It has been very interesting acquisition for us. We did the acquisition in 10,150 crores for 1,753 megawatt capacity, which translates to 5.77 crore per megawatt as compared to what we are setting up the capacity in north of 7 crore per megawatt. The normalized EBITDA of the asset will be 1,650 crore, which I explained in my last interview, as compared to the last year EBITDA of around 1,200 crore. So there is a 450 crore of EBITDA improvement plan. This translates to 943 or 953 crore per gigawatt of the EBITDA, which is substantially higher than what JSW Energy also, which is also the industry leading EBITDA generator. So this asset will be generating on that. So out of this 450 crore EBITDA improvement plan, around 390 is coming from generation. Out of 130 turbines which were down, we have already put 103, 105 turbine already put into use, and balance will be up and running by first week of June. So majority of this EBITDA improvement plan we will be capturing in the current year, and we will be achieving the run rate within this year itself. So we will be doing better than what we were guiding to the street earlier.
All right. Mr. Jain, a couple of questions now. Going through your presentation, you seem to have locked around 7.6 gigawatt of pumped hydro storage. Walk us through a couple of numbers. What is the capital outlay, point number one? What is the peaking tariff you're working with? And when does this get commissioned? Just on this one.
So, Nigel, we have logged in 10.3 gigawatt, which is translating to 72 gigawatt hour of the resources. Of that, 3.4 gigawatt of the contracts we have already entered into it, out of which 2.4 gigawatt hour with the government of Karnataka and 1 gigawatt hour with the SECI. And we will be starting and commissioning all these assets as soon as PPAs are signed. So the battery storage will be completed in 18 months time frame. We are expecting by October 2024. And the 2.4 gigawatt hour contract with the government of Karnataka PCKL will be commissioned in 36 months time frame from the signing of the date of PPA. Typically, per gigawatt, the cost outlay or capex outlay is 5 to 6 crore per megawatt. So, which is 5,000 to 6,000 crore per gigawatt of the installed capacity. And typically, these assets are 6.5 hours to 8 hours of the storage. So, you can say that for 10 gigawatt of the all assets, the capital outlay will be around 50 to 60,000 crore, and which will be translating close to something like 800 crore per gigawatt hour, or 700 crore per gigawatt hour.
Okay. Right. Could you give us an estimate of what two things actually. We have power demand numbers for March. We have numbers for April. I'm talking about overall industry demand growth. Actually, it was slightly lower, 2% lower in March, and April was minus. It got better, but it was still down. How are things likely to pan out for the rest of the year, in your opinion? How is May panning out? And, what will it do to prices? A lot of it will depend on the ability of producers and coal availability and things like that. What's the overall situation?
So Prashant, last year the power demand grew 9.5%. A year before that it was 8.5%. So far in the first 2 months the power demand has been subdued, but it is expected that the power demand will be growing between 6 to 8% this year. And in terms of the impact on the prices, coal availability front, last year the total capacity addition was 16.1 gigawatt, out of which 15 gigawatt was renewable capacity. This translated to close to 4 gigawatt of the net capacity addition. As compared to the last year, demand growth was 13 gigawatt. So the demand and supply situation is not matching at this point of time, and because of which higher power demand and lower capacity addition will be translating to higher power prices going forward. So this is going to pan out. However, in terms of the coal availability per se, last year was pretty good. There was a 15% growth in the coal production for the country. And this year also we are going to see the good improvement, and thermal coal prices are coming down. So this could be a good situation for the power sector for next 2-3 year perspective in terms of the demand supply situation mismatch. However, for long-term basis, government has taken a lot of initiatives, and which will be ramping up the renewable capacity addition in the country.
Okay, all right. Very quickly, before we let you go, should we see some value unlocking in your green vertical? For the time being, the street is listening to what you're saying, Prashant. From the start of trade today, that's just a few minutes ago, the stock has moved into the green. So the street likes what you're saying. But is there any value unlocking we're going to see on the green vertical? Maybe getting a PEA, maybe an InvIT, some kind of unlocking?
So we have been continuously working on the shareholder value unlocking, and we see quite a good prospects in terms of the growth of the business, as we have also spelled out in our presentation that balance sheet will be growing by 25%, at a CAGR for next 7 years, and we are quite optimistic about listing or value unlocking in our renewable business in due course of time. So there are a lot of options are on the table, and we are working on that. And at the right point of time, we will be taking the decision.
Just one final question. On In Bharat, one clarification. Will the entire capacity be set up for merchants? Because earlier the expectation was that part of the capacity would be tied up. And how would this change the economics?
So this is a pithead plant, and we bought it in NCLT. 2 units are there, 350 megawatt each. And we are overhauling those units. One of the unit was commissioned, so which we should be seeing up and running and fully commissioned on the bar by end of the second quarter current financial year, and second unit by end of the financial year. This is a pithead plant where the variable cost is going to be one of the lowest in the country. And looking at the macro situation, we expect that we will be running this unit on a merchant basis for some time. And as and when we see the opportunities to capitalize on the long-term PPA, we will be looking into it. Earlier, we were looking that to set up a polysilicon facility at that plant in order to backward integrate. But looking at the macro situation in China, we are expecting there will be an oversupply of polysilicon for at least 3-4 years, and because of which the polysilicon prices will be subdued. So because of the change in the market dynamics and macro environment, we are taking a decision to keep this facility on a merchant basis for some more time.
All right, Mr. Jain, we'll leave it there. Thank you very much. Good luck. Appreciate you joining in here on CNBC every quarter. Thanks indeed. Well, that's the management of JSW Energy with some perspective on the numbers and the outlook going forward. The